Welcome to the Art of Money podcast with Art McPherson.
And thanks for checking out the Art of Money podcast. My name is Mark Owens alongside Art McPherson and Luke McCarty. All the information for the McPherson Financial Group, you can find it at theartofmoneyradio.com. Luke, you were talking about some of the things we need to do as we prepare for fall, because fall is going to be here officially, even though we're still in shorts and we're still in the water. It's going to be here next week. And then the holidays are going to be here. And then the end of the year is going to be here. So help me out and give me a little bit of a checklist. What are 5 things that we need to do now with our finances as we prepare for fall?
All right, I'm going to give the checklist.
Okay.
And Mr. McPherson's going to respond. How about that?
We'll both respond.
Love it.
All right, so the number one thing you need to do before the end of the year is if you have a required minimum distribution, they are back, right? We didn't have them last year. Now we do, right? There's a big penalty for not doing them.
Yeah, so you want to make sure you do that. That's a big item this year. So if you're 73, 74, and you basically told the company you're dealing with, if it's not us, don't do it last year. You need to turn that back on. And usually that's not an automatic thing. It has to be requested. So make sure that RMD starts again this year, or you will be taxed 50% penalty tax on what you should have pulled. And then whatever income that adds to your taxable income for the year, that adds as another income there. So 50% is just the start of the tax. Then you have your other regular tax on top of that. So you're going to lose a lot of money there if you don't remember to have that pull.
So turn the RMDs back on.
Yes.
Okay.
Turn RMDs back on. If you are RMD age, right, it used to be 70 and a half, now it's 72. But if you've ever taken an RMD and you are charitably inclined, give the money directly from the IRA because it never hits your tax return. Right, so most of us now do not itemize on our tax returns. We take the standard deduction, so you don't get credit for your charitable contributions. Well, if you have the IRA company, send it directly to the charity, to the church, doesn't touch your tax return, counts as your RMD. It's a win-win. Doesn't count as income.
Right. So basically what Luke is saying is it avoids some income tax there, because if you're paying your church X dollars and it's close to what your RMD is each year, do it out of your IRA rather than out of your after-tax income, and then it won't be taxable. So it's a great way to get money out of that RMD and not have to pay tax on it. And it's a great way to also still fund your charitable contributions.
Okay,
Yes,
so number 2, update your charitable contributions.
Yes, and trust me, your church, your charity, they have a brokerage account to accept your money via transfer from a Fidelity Schwab. They have it. They probably don't promote it, but any way they can accept money, they will. So they have it.
They're not going to turn it down.
Right.
All right, number 3.
Number 3, check on your 401k, right? Are you taking too much risk? We see 401ks here all the time. Most of the time, it's 2 ends of the spectrum. It's 100% equities or it's 100% stable value.
Neither are good options, because if you're 100% stable value right now, you're getting less than 2%. And we were talking about 800,000, 1.2 million, 2 million or more. You are really not even keeping pace with inflation this year. So you're actually losing value when you do that. However, people a lot of times, because of uncertainty, because of uncertainty with taxation, uncertainty with the election, we saw a lot of that in November of last year. People get nervous and they kind of want to park their money. However, if you did that, you really missed a great rally since the election. So you want to be smart and wise, but you don't want to be overly cautious or overly aggressive. So the other end of the spectrum is you are putting all your money in equities. And if we have a big correction again, now you're exposed to a 30% correction, 40% correction. If you're within that retirement red zone, which is the last 5 years of retirement, now you may have to continue to work. And we don't want our clients to have that as an option. So we want to make sure you help protect, with your asset allocation. So get it in the proper asset allocation, really do some diversification, and then start doing other non-conventional assets to help reduce that risk.
Okay, so check on your 401k. And you mentioned it a second ago, how the markets were kind of affected by the election. 2022, we have midterms on the way. Is that something that we should kind of put in the back of our head to prepare for?
Yeah, it's always something, anything that can cause any sort of headline risk or any sort of risk to the economy is a good way to kind of make sure you're in the right position. Now, we did have clients when Obama was elected, wanted out. Stock market did good. Trump was elected, wanted out. Stock market did good. Biden elected,
wanted out.
Stock market's done well. So it's not all political, but yes, it's going to cause heightened concern from us as individuals.
Okay.
So don't make an emotional decision.
All right. So number 3, check on that 401k account. All right. We are doing the 5 things to do now as we enter fall with your financial portfolio. What you got for number 4?
Number 4, Roth conversions, right? I just said earlier in the show, they may be gone in 2031. So if you had a plan to convert your 401k, your IRA to a Roth, you may only have 10 years to do it. So if you are currently in, say, the 12% bracket, no brainer, you need to look at Roth conversions. In the 22 to 24%, you need to look at it because that bracket may be changing next year. So analyze whether Roth conversions make sense.
And we will help clients do that on a regular basis, or new people coming in. We will do that evaluation for them.
Okay. And that's also a part of that complimentary second opinion from the team in the McPherson Financial Group. When you set up that consultation, they're going to sit down and go over some of these checklist items with you as well. 321-425-8550. Take advantage of the complimentary second opinion from the team in the McPherson Financial Group. If you have that $300,000 or more and you're ready for retirement, you're in that retirement red zone. All right. Number 4 was Roth conversions. And the number 5 on the things we need to do right now as we prepare for and get ready for fall.
Estate planning. Do not put it off another year. Do not say in January that your New Year's resolution is to get your estate plan done. There's ways to avoid probate. It's fairly simple. You just have to do it, right? And then your estate planning, who gets what, why, what's going on, just figure it out before something happens, right? You never want to think about bad things happening, but they happen all the time, whether it be accidents. I mean, just you name it. So just have a plan so that way your beneficiaries, it's a lot easier as they're grieving potentially you or your spouse or whomever, that those are set in place.
And we've seen it a lot this year, Mark, with a lot of our clients. Unexpected deaths. You know, some of them have been COVID related. Some of them had just been health related. You know, we've had several clients pass away this year from unexpected health emergencies. And, you know, it can be somebody in their 40s all the way up through retirement, you know. So we've had 4 or 5 clients pass away in the last, I would say, couple months. So those are things that you want to make sure you have done just in case, you know, to make sure it's easy on your spouse and then make sure it's easy on your family. And by doing it ahead of time and having those conversations about simple things like Luke said, you know, just where do you want the house to go? Do you want it to be probated or would you like to avoid that? You know, all this money that's sitting in your 401k, it's going to become taxable to the kids and grandkids. Do you want to try to protect them against that taxation or do you want to kind of set up some ways to avoid that? You know, so those are opportunities you have now while you're healthy and while you're doing well. And when you're sick, you can't do that.
Thanks for listening. Want more from Art McPherson of McPherson Financial Group? Find us online at artofmoneyradio.com. We are an independent financial services firm helping individuals create retirement strategies using a variety of financial and insurance products to custom suit their needs and objectives. Securities offered through World Equity Group, Inc., member FINRA and SIPC, a registered investment advisor. Investment advisory services offered through ProStatus Group, LLC. McPherson Financial Group and ProStatus Group, LLC are separate entities and are not owned or controlled by World Equity Group, Inc. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Investment financial professionals are not licensed in all 50 states. Art McPherson is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Arthur McPherson. Florida Insurance License number A174. 725.
Today's show has been a work of art.